Shea CPA, and we primarily assist early stage technology founders with their tax compliance and accounting. So 2020 is drawing to a close, and for those of you who may have participated in the Paycheck Protection Program, you may have questions regarding forgiveness and the process of how that process is going to play out. So yeah, this presentation is really geared towards technology founders or tech-enabled entrepreneurs who have questions surrounding the process. It's not that the process is any different for this industry over others. It's just that there are some considerations that need to be taken for tech founders, and I'll discuss that during the course of the presentation. So I'll get started. So I think the steps for thinking about PPP forgiveness really for early stage tech founders starts at the board level. And for more traditional small business owners, they may not have to consult their board. They may be able to just, or the board may be a board of one, right? And you may just have to discussed amongst yourselves whether you want to request forgiveness. But I think it really starts at the board level for most tech founders that may be at seed or Series A round stage of financing. I think, after it's discussed with the board, I think you need to work with your advisors, general counsel, CPA, CFO to understand the timing of the application, gathering the required backup documents, understanding the forms that will need to be completed, actually submitting the request, and then understanding the tax implications of pursuing forgiveness. And the last real step is just accounting for the loan once it's been granted by the SBA. So these were the sort of the agenda, for what I'm going to be discussing today. And if anyone has questions, feel free to either message in the chat. It looks like we have a small group here today, so we could probably make this as interactive as possible. So timing of the forgiveness application. So there is essentially the deadline for the PPP forgiveness application is 10 months from the end of the covered period. And the covered period is sort of defined either by 8 weeks or 24-week period. So for those who may have received the PPP loan in May of 2020, when I believe the first PPP loan started to be sent out, if you're using the 8-week period, the deadline is probably going to fall for you around the end of April, early May 2021 at the earliest. If you're using the 24-week period, your deadline is probably being pushed into the summer of 2021. So considering that we're in December of 2020 now, there is time to get this application in. So I know some folks are in a bit of a rush to, they don't want to have the debt on the balance sheet and they want to get it off, and that's understandable. But timing the application, you have to consider the actual deadlines depending on what covered period you're going to be using, and I'll discuss that in a few slides. And then discussing the timing of the forgiveness with the CFO, co-founder, CPA, general counsel, and the financial institution itself. So one of the biggest bottlenecks with this forgiveness application being put in, for folks who may have already passed the 8 weeks period, right? You're saying, okay, I've gone past the 8 weeks, I've paid the payroll, I've done everything right. Why can't I get it in? And one of the biggest hurdles so far has been really the financial institution getting their systems in place or their applications in place to be able to submit the application. So with many early stage tech founders, a majority of our clients bank with Silicon Valley Bank, and I'll be talking a little bit about their process in a few slides as well. But what we've sort of seen across the board is that banks are sort of releasing the forgiveness application in tranches. So as each week passes, a new set of clients are sort of given access to the application. I think that's to prevent sort of just a huge bottleneck of applications going in all at the same time. And it's also just giving uh, the uh, the bank enough leeway to uh, submit the applications with the SBA, because there's sort of a two-way process. The bank gets the application, and then I guess there's some sort of review process there, and then they submit the documentations directly to the SBA. And then there's a whole timing issue around how long the SBA has to sort of get back to the bank and confirm that there's a forgiveness is going to be provided. I think the other thing with timing the forgiveness application has been that because of the PPP process has been sort of an ever-changing process. The rules keep changing. There's new forms that are coming out. We've also just had a presidential election, and there was some sort of thought that there could be some changes in the rules as to, depending on the loan size, more leeway in the forgiveness, and also the use of funds. I think based on what we're seeing now as well, there could be potentially a PPP round 2 with the next stimulus proposal. And there is also some concern about whether, if for companies that apply for that second one, do they just apply for forgiveness once, or do they do it twice, for 2 separate loans? So there is still some uncertainty around when is the best time. Obviously, you want to get it in before that 10-month and before the end of that 10-month period from the end of the covered period. But so the way we're sort of we were advising our clients up to this point is sort of let's just wait and see shake out. And depending on the loan size, you may not have to submit as much documentation, or the process may be a lot easier versus going through it right at this moment. Also recently, and I'll talk about this in a moment, there is some new forms that have been released. So I think, depending on your company and your board structure, for PPP forgiveness, you may want to get board approval, and you may want to formally have it either written down in the minutes, or that this is the process that the tech company is going to be taking. What we initially saw when the PPP applications were rolled out was there was this sort of public relations outcry that early stage tech founders shouldn't be applying for PPP loans to begin with. So even amongst our clients, it was pretty much 50-50. 50% took the PPP loans, and 50% said no. It may hurt our public image in the long run, or it may hurt the image of the investors, or the VC funds that may have put backed these early stage companies. So there is a PR standpoint that you want to look at, and more recently, the SBA has released information about who took the PPP loans out, and that's available on their website. And I think if there's a freedom of information request for who's requesting for forgiveness, that information at some point may also be released to the general public. So for early stage tech founders, if you have a fast growing startup and you think that this could hurt your image in the long run, that you're seeking forgiveness of this PPP loan, it is something that you want to consider. And that's why speaking to the board about it, speaking to your advisors, your investors, is important. Some tech companies have suffered during the pandemic, and some have seen their fortunes rise. And based on where you are and whether you think you can pay off this loan reasonably quickly, if you're not going to be seeking forgiveness, that could be another avenue to sort of pay it forward or pay back the loan and get some positive publicity from that perspective. So I think that's something that's, for a lot of early stage tech founders, it is something worth considering. So I'm going to talk about some of the required documentation for if you are going to be pursuing the forgiveness process. Essentially, the eligible expenses for the PPP proceeds were payroll, rent, mortgage interest payments, and utilities. Those were really the three main areas. And across most of our tech clients, what we're generally seeing is that the payroll, just the payroll costs alone are pretty much covering the entire forgiveness amount of their PPP loan. And there are some questions around on the application. Do you need to enter in the rent and the utilities anyway? I don't think it hurts. However, if you are filling out the longer PPP forgiveness application form, the 3508, you may have to submit some documentation to the bank to substantiate those costs, including a lease agreement or the copy if the business has property, a mortgage agreement, and rent bill. So it just increases the amount of documentation that you need to submit to the bank versus just having to submit the payroll document. So I think for some of the clients we've helped so far, that's been a big consideration, is just the amount of documents they want to compile and submit and have subject to examination. So yeah, these are really the three main areas. So the other big thing was whether you are going to be using 8-week period or 24-week period for requesting forgiveness. And the reason this became important was that due to the pandemic, some companies either had to temporarily furlough or lay off individuals in their teams, and sometimes it took them a while to bring them back. So the 8-week period may have not sufficed, or you needed more time to use the funds. So what we're finding is that most of the tech companies that we work with, they worked from home for the most part, and they were able, most of them are able to use the 8-week period, and then only in a few exceptions we've seen that the 24-week period is needed. There is also some an alternative payroll period that you could pick, which is sort of in between that, but you need to run your numbers based on that period if you're going to be using it. So the payroll companies like Gusto, Trinet, JustWorks, which are, usually most of the tech companies we work with one of those three. They've been pretty good at generating the reports that you need, forgiveness reports that you need to run that help you make this determination. And essentially what you're doing there is you're comparing, okay, if I use the 8-week period, was there enough payroll spent in that time period to cover the PPP loan that I took? And for some clients, they may find that, actually they need to work it out based on the 24-week period. Another thing for tech companies was that there was sort of like a salary cap on that the first 100 that only the first 100K of wages would be eligible, and that then would be then divided into that over 52 weeks and then multiplied by 8 weeks to become an average. And for some of our clients, they do have more highly compensated employees that are paid over 100,000. So some of those calculations sort of came into play when you were thinking about the time period. But I think the payroll companies have done a pretty good job at generating the reports that help you make that determination pretty quickly. The other consideration for the PPP loan is the EIDL grants and EIDL loans. So this was economic injury disaster loans. So early on in March and April, on the SBA website, there was a way to apply for these EIDL grants. And if anyone remembers, it was a pretty simple, like 1 to 2 page application form, you submitted it, you put your banking details, and then I think 2 months later, some of our clients started reporting that they had like $10,000 that just popped up in their bank account. So the way that the SBA administered the EIDL grants is essentially they were paying $1,000 per employee up to 10 employees. So the max EIDL grant was $10,000 during the pandemic. Now the EIDL grant needs to be factored into the PPP loan application. Essentially, that portion of the EIDL grant wouldn't be subject to forgiveness. So you wouldn't be paying back the EIDL grant, but you would effectively have a reduction in the PPP forgiveness for the amount of the EIDL grant. So let's say you had a 50K PPP loan and you had $10,000 that came from the EIDL grant. The max forgiveness you would be able to get before considering any other of the factors would be 40,000. You would have to subtract that 10K out. So just to give an example of how that would work. So for some of our clients, they did receive EIDL grants. And then some also applied for the actual EIDL loans. Now the EIDL loans would not be factored into the PPP computation. And those loans are not, there is no forgiveness on those loans. Those are, I believe, 30-year loans at 3.75% interest rate. There is a deferral on that loan so I believe some companies will start having to pay back those loans beginning next year, or probably around May, June as well. So those loans need, when you're looking at your deposits and you're trying to figure out whether the money is a loan or a grant, you need to just make sure that the initial deposit that you receive for the EIDL grant is separated out from the loan and that you don't have it mixed up. Because the loans were for, I believe, a max of 150K. Usually I think EIDL loans are even higher, but during the pandemic, they capped it around 150,000. So what form do you need to fill out? So essentially, there are three forms at this point. There's a 3508, which is the long form, 3508 easy, that borrowers who meet certain conditions can use. And then there's a form 3508S, which borrowers with loans under $50,000 can use. So typically, we're finding that most clients sort of fit in within that 3508 EZ or 3508 form that they have to fill out, especially a lot of the tech companies we work with. Most of them receive PPP loans above 50K, but if you did receive under 50K, that simpler form is a lot more straightforward to fill out, and there's less documentation requirements. Again, I would just say keep checking back at the SBA because, you know, I don't know, next week they may have a new form. The 3508S came out maybe about 2 months ago, and the banks are still starting to get that form sort of into their process. When they initially rolled out their forgiveness portals, it was only limited to the 3508 and the 3508 EZ. And I think they're sort of catching up to this new form that got released recently and making sure that their online portals can accept them. Yeah, that's something that you need. I would just say, just look at your bank, whether they are ready to even accept that form. So the 3508 EZ, I just have an excerpt here from the actual application. Essentially, there are some exceptions of who can, exceptions, I guess, of who can use these, who could use this form versus having to use the long form. And essentially, self-employed people could use this company, and also regular companies. You know, most of the tech companies are Delaware C corporations. They can use this form if they haven't reduced their annual salaries more than 25% during the covered period. And then there are other rules around the reduction in full-time employees. So as long as you meet these conditions, you can fill out the 3508EZ form. So most companies who have loans of over 50K should be able to qualify for this unless you've had those extreme reductions in payroll, which would mean that you would have to fill out the longer form. And as I mentioned, yeah, this form is for PPP loans of 50K or less. There was some companies that may be in affiliation with other, common parent, where you may have multiple loans under 50K accumulating over 2 million. Those companies wouldn't be eligible to fill out this form. So if there's so you'd have to take a look at those affiliation rules. But for most companies that have PPP loans under 50K, they should be able to fill this form out. So I was going to just take a quick look at some of the banking guidance, especially as far as the forms. I'm just going to bring that up on screen here so that we can just take a look at SVB and Chase as two examples. So Silicon Valley Bank, they've provided this really good documentation guide that gives you each form and what needs to be submitted along with it. So I can put a link in the chat or follow up after the meeting with you all with some helpful links. But I found that their guide here is really clear in letting you know what's required, what's not recommended to be submitted, what you don't include, what you do include, and this, regardless of the form you're going to be filling out, it gives you just a good guide to which form and what documents you need to be submitting with those forms. So yeah, I would definitely recommend just taking a look. Depending on the financial institution you use, they may have some helpful guidance that you can submit along with the application. So I think for most companies that, with the 3508 or the 3508EZ, as long as you have the payroll reports, those are best. And you could see how they're saying that they don't want to see all the bank statements and the canceled checks because they don't want to go through all those documents. With the 3508S, I think they have a 3508EZ. They have a guide here. Again, they're recommending mostly the payroll reporting reports, which you can sort of pull from Gusto or TriNet or JustWorks, or if you're using another payroll service, they should have those that you can pull out. Some payroll services may not be putting those together, so you may have to sort of manually cobble together the data. But by and large, we are seeing the big ones putting the payroll forms together pretty well. And then the 3508S, let's just go to that form. There was a guide there. Here we go. So with the 3508S, it looks like there's not much as far as that's going to be required. So anyone who has less than 50K loan of a loan, I think most of what you're going to be doing is just pulling the forgiveness report from the payroll service and submitting that. So I definitely recommend taking a look at this guide. And as I said, I could follow up with this with you all after the meeting. Also, Chase has put together a pretty good example guide. I actually just saw this morning. They sent it, and they've given some examples depending on the type of form that you're filling out of what needs to be submitted. And it's sort of like a plain English way of going through this, especially for business owners that may be trying to calculate all this without the without the help of an accountant or someone. So I found their examples and their guide pretty useful. So I would also recommend taking a look at that if any customers at Chase. Incidentally, with Chase, I believe if you have a loan less than 50K, I believe right now they're only accepting 3508 EZ and the full 3508 form. And they sent out a notice, a client sent it me last week, that they're going to start accepting the more simpler form, the 3508S, beginning next year. So this is another example just where like the banks aren't fully ready to accept all the forgiveness applications. I think they still are accepting forgiveness applications, even if you have a loan under 50K. However, I think you would be filling out one of the longer forms or the easy form. So I thought we could just take a quick look at that. So yeah, as I said, with submitting the request, I think it's checking with your bank and seeing how to apply for loan forgiveness. That's like really important. It looks like each bank is sort of requiring a different amount of data. Another thing that we're also finding as well with some of our tech clients is that banks that originally and we're seeing this with Bank of America specifically, some loans that originated at Bank of America, apparently the initial underwriting process wasn't that stringent, or they didn't get all the documentation they needed at the time of application. So what we're actually finding with some of our clients is we're having to go back and almost do the original PPP application again and send the documentation needed for that original loan issuance. So some of our clients are getting confused in that because they're thinking, oh, I'm getting this call from the bank and they're requesting for loan forgiveness. But what they're really doing is going back to their original documents and getting all the underwriting information needed for that original loan, because they didn't have the documentation they needed because of the rush that sort of went in April, May, June of last year. I think a lot of banks may have skipped some internal controls and may have automated a lot of the decision process. There is some news now that there was some fraud coming out of this whole PPP loan process, and I think the banks are sort of going back to their original applications and making sure that things went, all the documentation they have is enough for the SBA to prevent the SBA from rejecting the original loan. So if you're getting calls from your banker about that, it's something that not to be confused with the loan forgiveness. So what we're also finding, especially with Bank of America again, is that they won't allow us to start the forgiveness process until that original loan application is sort of solidified. So that what they want is the loan to be making sure that the original loan that was given out, they have all the documentation for that. And then once they're clear with that, then they're going to allow for the PPP forgiveness process to begin. So we are hearing that there are some issues around that. So yeah, I think there is going to be some patience needed through this process, and it's not going to be so a straight line linear process. So yeah, now I'm going to talk a little bit about the tax implications. So as of the way the rules are written right now and the guidance that the IRS has provided, PPP loan forgiveness, if your company is planning on pursuing it this year, or if you're planning on applying it for next year, you cannot deduct the expenses on your tax return related to the PPP loan proceeds. So if if you use the money for payroll, you won't be able to deduct for that 8 weeks or for that 20 weeks the payroll that is going to be ultimately forgiven. So this doesn't include, if you use your EIDL loan to pay for your payroll, you could still deduct that amount. It's if any of the PPP forgiveness, whatever you're going to say that adds up to that, whatever your total loan amount, that will not be deductible. So this is a big consideration for a lot of companies, especially those that may have not seen the revenue decreases. So what we found with some of our clients is that, maybe, March, April, May, maybe they've had a slowdown, but then since then business may have picked back up. And what this means is essentially that you may end up owing a lot more taxes than you originally thought. Because on your P&L, you may have this expense line that shows your payroll and your rent and your utilities. But once we actually do the calculation, you have to back out some of those expenses for your tax calculation, and those won't be deductible. So for a lot of our early stage tech clients, because they have net operating losses and they have different tax credits, they aren't as impacted by this, but this is something that may impact companies that may be at the pre-seed stage, or if you've just done a Kickstarter campaign, or have had some, you haven't raised money yet and you've just went straight to market with a product and have been selling it, or software product and you've been selling it, it could be a big consideration. And planning around this will be paramount. Thinking about, okay, how much is the company going to have to set aside when taxes become due in April of 2021. With the upcoming stimulus bill, there was some talk of Congress reversing this. So, another aspect of PPP forgiveness is, sort of waiting for Congress to undo this. But, I'm not sure. It could probably go 50-50 either way at this point. And I think a lot of it is going to be driven by how quickly the economy starts to recover as in 2021. But this is something that we were hoping the Congress would reverse. But at this point in time, we haven't seen them. Nothing has passed yet. So at this point, if you're going to be pursuing PPP forgiveness, it's not deductible. Now some folks have thought about, okay, well, as long as I don't apply for forgiveness in 2020, what's to stop us from deducting those expenses in 2020 because I don't do it in 2021? Well, the IRS came out with a revenue ruling in 2021. Just about a few weeks ago. Revenue, I believe it's 2020-40, that where they talked about that specific scenario. So essentially, anyone who's going to be sort of pushing off their application for forgiveness in 2021, as long as you thought about doing it in 2020, you're going to have to reduce your expenses, almost like you're accruing the deduction in 2020, regardless of when you actually end up applying for forgiveness. So that's going to prevent folks from being able to sort of just kick the can down the road a month and say, oh, I won't apply this month, I'll apply next month. That's not going to change anything. You still won't be able to deduct those expenses. Now, for those companies that apply for forgiveness and get rejected, and let's say in 2020 you do what the IRS says, you don't take the tax deduction, and then in 2021 you end up getting a rejection for your PPP loan forgiveness, and you end up having to pay it back for one reason or the other, you will be able to take a tax deduction in 2021 for any expenses that were rejected for that forgiveness application. So that's something the IRS did clarify. But yeah, if you have a reasonable expectation of reimbursement, then the expense will not be deductible as of now. Okay, and now I'm just going to talk a little bit about accounting for the PPP loan and how it's going to impact your financial statements. So what we've sort of found is, as companies receive the money, some of them just booked it right onto their income statement on their P&L as revenue. So that's not the case. The PPP is a loan. So it needs to go on the balance sheet as a loan. And when you actually receive forgiveness for the loan, it needs to come off the balance sheet, and then it will go onto the income statement as other income. So you wouldn't want to put it with your primary income. You don't want to mix it in with your actual sales from, from sale of product or software or hardware, or whatever it is your company is selling. You're not going to want to put it there, but you are going to show that as other income. And on the balance sheet, you may also have to just think about whether there's any EIDL grant that's sort of left over that you need to pay back. So I think for many companies who took the EIDL grants and the PPP loan, you probably won't have your entire paycheck PPP loan forgiven. So there will be an amount that's still going to stay on the balance sheet as a liability, and whether that's up to $10,000. So I think a big consideration there is, how soon do you want to pay that loan off, because it will start to accrue interest, and you want to pay that off. And for those loans that I believe were issued prior to early June, the interest rate is 1%, and the maturity is 2 years. And I believe loans after that period, the maturity date is 5 years. So you probably don't want to stretch out that if you have the funds, it's probably best to try to clear that off the balance sheet as soon as possible. For some companies, obviously that won't be possible. So it will start accruing interest, and you will need to report that on the income statement. The income from the PPP loan, once it's forgiven, it's not going to be taxable. So the same way you can't deduct the PPP expenses, the income is also not going to be taxable income. So on the tax return, that will be excluded. You will still need to report it, but it will be essentially non-taxable. You'll report it as non-taxable, subject to income tax. So yeah, so that is really the accounting of the loan is really just a function of making sure that once you have the loan balance forgiven, that either the entire thing or whatever the amount is comes off the balance sheet, and you just have left over essentially that EIDL grant that you'll probably have to pay back. Beyond that, I believe the accounting is rather straightforward. So at this point, I think I could probably open it up to any questions. And here's my contact info if anyone wants to reach out to me to follow up. So yeah, I think, Nina, were there any questions in the audience?
So much for a great presentation. I have 2 questions. One, I work for a nonprofit. We're helping clients to apply for PPP forgiveness. And my 2 questions, first is that I just want to, my understanding on, let's say, for example, non-payroll expenses, the car lease, if they have it prior to February 15th, that's forgivable. And where if it is a car loan, the interest portion is forgivable. Am I correct on that?
Yeah, that's a good question. I'd have to take a look at, I think this sort of comes back to the rent and lease and the mortgage interest, sort of the mortgage payments. So I think there is some interpretation that is true. However, I think if you are, if you can provide the forgiveness without including that, just including the payroll and the rent, or and not have to rely on the car lease, then that may be more preferable as
Right.
the way these because the banks are accepting such a high volume of forgiveness applications. If you start putting in things that may be in the gray area, I feel it could delay the forgiveness, or it could there may be more back and forth between the bank, the lender, and the borrower to like substantiate the documents. At the same time, some banks may just accept it as is, and it may go through for the same reason because there's such a high volume. But the whole point of this program was really to cover payroll and wages. However, there is I think you can make an argument that those sort of car lease payments and any agreements before that date that you mentioned, was it February 15th?
Yep.
Should be deductible. Yeah. But
Got
yeah,
it.
I would just check in. Yeah, I would just check in with the bank, or if you have someone you're working with there, because what we've found is that some the banks are pushing back on some of the documentation, especially with if they're banking with Bank of America. We found like with them, it's taking a lot more time to like process anything.
Got it. Thank you so much. And my second question, early on, especially on S corps, there were SBA did not come out with the official guidance until April 24th. So quite a number, from what I heard, is S corps on the distribution where quite a number of banks allowed it. But since the guidance came out April 24th, I think some still trickled through. But do you know how banks are handling those now on the forgiveness side, if business owner made a distribution paying themselves rather than on payroll?
Yes, I think with the way that the application is written on the 3508 and it says payroll costs, if you include distribution on there, but then there is no backup payroll documents, showing that. Of course, you could show canceled checks or you could show the bank transfer, but again, I think that's one of those ones that may fall into the gray area. I think if the loan is less than 50K, you may get away with just reporting it that way, and because they're not asking for more documents, you may not get checked. But if the loan is bigger than 50K and you're not filling out that 3508S form and you're filling out the long form or the easy form, they may, you're going to have to, they may come back and ask for more detail or reject it. But yeah, they like you said, because the FAQ on the SBA website, I remember, back in March, April, May, like it just kept getting updated almost every few days. So there was a lot of confusion around what constitutes payroll. So I think an argument again could be made for that, and it's just about. I think a lot of it's got to do with whether you want to go fight back and forth with the bank, the bank or the SBA, and but yeah, I think if it's less than 50K, you probably may get away with it.
Got it.
But
Thank you so much.
Yeah, no problem.
Do we have any other questions?
Yeah, hi Shay. This is Osvaldo Rengifo. And I'm business advisor, and I have a client who got approved the PPP loan as a sole proprietor, and she puts everything as a paying herself. So in that case, how is that gonna be? Put it into his accounting. How you gonna book that transaction? You have to put the PPP loan as an income, as you said.
No, I think actually for most of the forgiveness applications that we're doing are for corporations, but for individuals, I believe I think it's a little bit more of a straightforward process, and they don't have to put it. You don't have to put the PPP back as income, and you don't. And there's a calculation which is I think in the SBA rules where you can have a certain amount won't be forgiven and then the rest is forgiven. I think it's up to 75% or so of the loan for any self-employed individual will be forgiven, and I believe 25% or some amount needs to be paid back. I think last time I checked for self-employed, I
Yeah.
mean, I'm not sure if anything's updated there, but
She-
last time I saw
she-
it.
She actually got 100% forgiven.
Oh,
She
great.
was
Okay.
just confirmed. Yeah, yeah. But the thing is, since she didn't pay, she didn't use that money for rent. So now the rent she gonna pay. Now she can put that rent expenses for her 2020 taxes. Yeah, and the other is the income for that full PPP. How she gonna put it? As it should be an income.
No, it's non-taxable. You wouldn't put that. So, you know, I believe on the Schedule C, there's, you know, if you're self-employed, you don't report your own salary, right? That you pay taxes on the net income, on the profit, right? So I don't think she has to report that anywhere on the Schedule C.
That's great. Thanks.
Yeah, if she's self-employed, yeah. All right, well, thanks everyone for joining. I know we had a few attendees. Hopefully you got some value out of this presentation. And as ever, just feel free to contact us.